All right, good morning. Been a wild week, and it was anticipated in the advisory letter over the weekend. Just assessing how things looked. I wrote, "You're going to need a seatbelt for this," and it's probably not over yet with options expiration. Maybe the options expiration will settle things down and just pin things, especially with this gap down now to major support. Trading range, wild, big bars, the big up bar there, bottom of the range where it looked like it was going to roll over down to the 50. And that's what we've been dealing with lately. It's like, these setups, weakness that looked like things were going to drop down to prior support levels and buyers stepped up again, end of year. These managers really don't want to sell unless they have to. And so, gapping down to the bottom of the trading range now. The question is, will they step up here? You can see the 5-minute chart. This has got bad ticks in it, which I can't fix right now. But you see what prices are when the cursor is. So maybe it goes down a little bit more, but you know, our factory work, right, which is how we interpret price action. And one of the ways is if prices go quickly from a top of a range to a bottom of a range, and they may break down through the bottom of the range, a greater than 100% retracement, we're not selling that. Now, we ain't necessarily buying it either. So, from a daily chart point of view, that would take a few days of stabilization. And this was pretty good over here, where it had the red bar being ignored and it flipped back up again. So, but how many times can you test the support area and hope that, or expect that it's going to turn out well? And generally, I would say 3 times and you're out, so 1, 2, 3, here's number 4. So with the options expiration, and we were looking at large open interest at different strikes that are going to expire on Friday, and 400 was the big one. And so I would suspect, as we always do down at a support level, that buyers will initially show up. And if they can push it up, I doubt they'll be able to get it through 400. And there were other strikes that I looked at over the weekend. I didn't look yesterday or this morning, but there were others, above 400. And, part of my thinking was, well, if I owned one of those call options that was going to expire on Friday, and at this point prices are going down there, I mean, my what I would refer to as intelligent hope mode is beginning to dissipate pretty rapidly. And I'm going to look to maybe salvage. Well, I'm either one of two things. I'm either going to say, whatever, it's an option, it was a bet and let it go to zero. Who cares? Or I'm going to take whatever money is left out of it, because I don't think it can survive again. And, the hedges that accompany that have the potential to drive things lower, but unlikely. I think, just this thinking, of the end of the year and options expiration, that I think we might just get stuck just at a lower level here. And then if things are going to drop, we'll see that happen, maybe next week. But, now that it's down at major support, the starting bias is there are buyers down here. They'll step up again. And on a smaller time frame, we don't have a pivot yet on the spiders. We will when this bar is done, which is a few minutes. Well, exactly. I don't have the timer on here, but when it's done, this will be a pivot, and then a retest or a break below there, and we'll see if it holds or not. And I've got my alert set down here at the bottom of it, which has been there for a little while. And of course, at the end of the week, we're going to be very interested to see what this bar looks like. Remember, this was a big green bar. It's a great example of what we talk about in MT Live and in the courses, explaining bar by bar analysis and candles and the psychology of them and how that can change. And this is a great example that this weekly chart was a big green bar over the top of the red bar. And you have to be really aware of your thinking, especially from an intraday trading point of view, is that bar done yet? And so we can look at a 5-minute chart and we can see the green bar, and it's like, wow, that's looked powerful. Let me get in. And before you know it, at the end of the 5 minutes, it's a red bar or a big topping tail. So here, that was a big green bar all the way up to the top of here. And it looked like, okay, this thing's going to 420, 430. And now, at the end of tomorrow, this is a giant topping tail bar, or if it closes below the open, well, clearly we're going to go into next week with a bias of, well, if it breaks these lows, it's going to go down. And then we'll see on a smaller time frame whether it can chop a little bit or forms a bar like this where it tries to go up, that real topping tail bar, because that was a decent setup to say, hey, if it breaks the low, down it goes to the 50. But it didn't break the low. I mean, over the years, that one concept of, hey, just let it break the low and I'm in. But it doesn't, and it just saves you from a bad trade. And why the idea of the first reference point of support is a prior bar is low and resistance is the high. And it cleared the high and went up to the next resistance. And the second is the pivot. And then it got cracked back down again. So trading range until proven otherwise. It's a mess. Big topping tail, rejection, moving back down. It's under 4,000. So we got one support level here, and that was overnight back there. These bars right there at the bottom of that green bar. So with this kind of retracement, we can't ignore that. But I always look at things and saying, where would I want this to go to where it should be a no-brainer, where buyers would step up again? And that would be down here, all the way down there. Now, we'll see if it does. Now, the price action that's happening right now, it's getting close. You see that little tail bar right there. And buyers stepped up and getting knocked back down again. And we'll see if it holds around here. But I would think it goes down here. And when it gets down there, there'll be more willing buyers to give it a shot to have some type of intraday rally. So SPX, I was surprised. I thought there'd really be like some monster premium, and 38.65. I would look before 38.65. I'm a little hesitant, as you can hear me, because it's, things are opening down here to get there. But, that's a pretty big size move from yesterday to get down there on support. And you don't have to hold these things until the end of the day. Sometimes, 50% profit in a few hours, you can take it and move on. But, there were times not too long ago where it was like, okay, this is for sure a no-brainer. It's so far away. And things have changed a bit. The upside, I have 42.10. And, it's down here to get back up there at the bottom of the trading range. I'm not comfortable with it, but hey, to each his own. We'll see. Especially, again, we see that buyers want to continue to step up. And, that 4,000 level could just act like, hey, it's down here. This is where the big open interest is. And somehow it just works its way back up there again. Whereas the downside, it's still not too far. Considering it went from the top of the range to the bottom of the range, and this is down here, I think logically that just makes more sense as a put spread. Other markets, This is, I'll just drag this here as a line and not my green zone, which getting down there where my interpretation is buyers are going to be more aggressive, whereas down here, it's just a more minor level within the trading range versus a major level down, within the bottom of the trading range. So it's stalling here, as you can see. So as we look to the left, every reference point to the left will be utilized by someone on some time frame. And however, the most significant one where the majorities will be looking at is down here. And again, 1, 2, 3, can it survive a fourth time? 3 times it couldn't get to the high. We all know anything's possible, but is it likely? Historically, no, it's unlikely. And so now, if you remember at the beginning of the week, I talked about, what might play out here. And what I said was, the potential for a head and shoulders top. Now, that's a wild one with this topping tail that formed. But if I put this on a closing basis, it's going to look just like a head and shoulders top. So now here's your neckline, and that opens up the door, right? We had some thoughts or discussion. Is the bottom in? Well, you've got a wide range bar creating a void, and you've got this topping pattern, and a break and close below here is going to open up the door to testing the lows of the year. So that's a real possibility. Or can it just stay, can it give us more, Alka-Seltzer moments and stay in a trading range until the end of the year? But typically this pattern, forget seasonality. This is a pattern that breaks the low and would come down here. And if interest rates start going up, right, and tech suffers some more, that's going to be a negative. Now, interest rates are actually moving down. Right? There's a negative, but it's within this range. So, still range bound. It's on major, well, not major. I call it kind of a major support. It's not a pivot, but this congestion there, and this is holding. So what would throw some gas on the potential fire to drive prices lower? This flipping back up again. And, regardless of, that, even if it moves down, if you don't see XLK, if that starts moving down and if XLK doesn't start to find some footing here, and this continues to move down, it's a pre-market little data that's there, and this starts moving down, well, the Qs aren't going to hold that support. Right? And of course, SMH, it's just some intermarket ideas and things to be looking at to kind of filter through the tea leaves as to, is it really going or not? I don't know why this is taking so long to fill in SMH, but you get the idea, to look to the left there. I'm just going to keep going. So for whatever reason, it's not filling in. There we go. So this is gapping down onto support. It's not at the bottom of the support, but you just want to do the same thing, So this is, basically how I do it. Like those major levels, support green, and then I have to apply it to all charts. And so even on my intraday charts, with this, I don't need to look to the left on my 60-minute. This comes down to green, and I start looking for bottoming patterns on a smaller time frame. Right. Everything is a mess. Why don't we stop this bullshit and have a judgment room? A judgment room? I don't know what that means. We can start judging you. That's what you meant. Tony said, Fed raise short-term interest rates. 10-year may not go higher. Well, back to the yield curve. So interest rates are coming down. So there are two things here, and without getting too far into it, because we're talking pre-market here, right? Why do interest rates come down? Well, interest rates come down for a slowing economy, right? And so recession thoughts, right? And at this time, they were coming down. One part, they're raising interest rates. It wasn't having much of an effect, right? But interest rates are coming down because of a short-term belief that inflation was waning. So interest rates begin to come down because now lenders start thinking, inflation isn't so bad. Maybe I'll lend that money at lower interest rates. But it's twofold here. The inflation thing, which is still high, but these short-term interest rate increases having the effect of slowing the economy. So at one point, the inflation being less was a positive, but the recession coming is a negative. And so now as this comes down here, it'll be interesting to see if buyers begin to step up. As we always look at the dollar, right? I mean, these discussions get a little deep as far as time to talk about all that. But the dollar is now moving down, which was a positive, and now the markets are gapping down. A couple of weeks ago, I threw out the idea that these things what was good may turn out to be bad, and it's kind of like what's happening. And so we'll see if the dollar actually holds here or not. So tried to hold the 200 on the daily, and now it's broken lower, and the markets are going down. Whereas, a couple of weeks ago, the market would be rallying high. So things are flipping. All right. I mean, everything's, now, silver's coming in a bit, gold getting smacked down pretty good. Crude oil forming a sell setup at minor resistance. And the oil stocks, they underperformed. And now, on the hourly, we got this little double top. So this looks like it's starting to roll over. So, maybe USO, you want to short USO or some leveraged ETF, may take a look at that. And transports, right? They had a good day yesterday, and that'll be coming down too. And you can see this topping pattern. So we'll see how things look at the end of the day on Friday and options expiration. And as we go into the end of the year, right, we got a couple of weeks, and traders start to go away. Fund managers really don't want to sell, but it's like, are they going to blink or not? So we'll just see how this unfolds and assess it day by day. All yours, Dan. Oh, by the way, these are not lined up yet, so there's some gas in the tank as far as internals go.
All right, awesome. Yeah, remember I always say yesterday was a mess. I didn't do a thing, but I said we got to just typically wait for the day after, let the news get digested, and it's getting digested to the downside. All right, good news. This is my new laptop. I guess as Greg was talking there, I was trying to make my pointer bigger and black, and I couldn't find it real quick. But when we slow down in the morning in the green room, let's try to make this pointer bigger for everybody. Yeah, yesterday was a total mess. I did absolutely nothing yesterday, new trade wise. And the way we're flat in the weekly options trader. Everything is, screen looks good. All right, cool. Yeah, this new computer is like crystal clear. The words are so sharp. So yeah, I can tell. My old one, I think, was, I forget, 3 or 4 years old, but new technology. All right, coin here. I was watching yesterday, and I said it would be a 1, 2, 3 for today, and that is a beautiful 1, 2, 3. I mean, it gapped up, range expansion, engulfing, closing breakdown, inside bar in the bottom third. That's a 1, 2, 3. So that is a tier 1 short idea. We just got to put it in a window and watch it with the market. I'm always looking at the fangs, and when I'm like, wow, Netflix down 15. This thing's been a beast. So 302, notice that's right to the 20. But you know how we talk about gaps, range expansion, the velocity of a fall. This to me, unless it's just a scalp, that's damaged. That's an ugly big gap down. So that's damaged that uptrend. HEYS, I see it's a couple little prints up here at 63. If it is, then it could be a put spread, 30-minute high. Yesterday, MT Live, we talked about multiple time frame, and these are not in agreement. Where we have a bullish turn at the 50, but look at the weekly is a bear 1, 2, 3, and the monthly is a climb up. So they're not in agreement. So any bullish trade we would take would just be short term. But if it is gapping up here to 63.50, that's a bullish gap in a bearish market. This poor Riven we talked about for a while now. This actually was in the weekend advisory letter, and the gap down on Monday messed it up. But we were shorting this breakdown daily, weekly. Oh, thanks, Joe. I mean, look at this weekly. You know, with all the money thrown at this industry from the green deal people, look at this chart. Man, you know what? I would never buy a product from a company that I needed support from with a chart looking like this. That's saying there's a bad, they got a bad problem on their hands. Roblex, look at that. Look at Roblex gap. And let's see, there's been a lot of potential bottoming patterns that are now failing. And this is one of them. This was a nice potential bottom in a downtrend. And now it's gapping under 30 bucks. 30-minute low, that looks like a short. Pot, I see one print up here at 319. Now, you know, I don't have time for a quiz, but remember that other one I said the weekly monthly were not in alignment? Look at this weekly monthly. Well, the monthly's at a prior high, but still it's bullish. This is an amazingly bullish chart. If it is gapping up to 319, I put it here in the bottom right. I'll keep an eye on it. WDC gapping down, got a downgrade, but gap down's too big. These three military actually got upgrades, and so I looked at them and I'm like, wait a minute, this is a bear 1, 2, 3. And they got an upgrade. So 30-minute low, that's a short idea. Knock, nah, that one's more neutral. LHX gapping up $3. No great pattern. And these were earnings stocks. Jabil, I think Sam I Am, Machine Gun Sam, we call him. He's done 176 earnings trades this season. And he's successful 171 because I'm counting Jabil. He did a short strangle, which is selling it out of the money, call and put, opening flat. So that is perfect. Perfect for options selling into earnings. Lennar, 88 bucks, bearish gap. So that's leaving a big upside shakeout. I don't know what to do with it now though. TCOM, look, you know, now you all see why I have my little weekly monthly here. So look, weekly is a breakout, monthly has the term again. This is right out of yesterday's MT Live. You got a price void on the monthly, you just eyeball it to $40. I'm not trading the monthly, but it's in bullish alignment. and it's gapping up on oh, this one, okay, it was had earnings. So I'm going to keep an eye on that. Put it in a 5-minute window of the computer. NDSN gapping up, but that's a mess. I just, it's gapping up to yesterday's high. I don't like the way it trades. PL gapping up to 546. I don't know. It's just in a trading range. No interest. Rick. Wait, it shows it gapping up 380, but I don't see the gap up. All right, so I don't know about Rick. I'll put him in this middle window right here. CLSK is gapping to the low end of this range in a downtrend, no interest. These were a couple left over from yesterday. Oh, Debbie mentioned this, RIG. Let's see, daily, weekly, monthly are in alignment. We just got to now wait for a pattern and keep an eye on the oil sectors and the broader market. And that's all trading is. I now have something worthy of waiting for my setup. I know. Can you believe I'm watching something she gave me? And it was, you know, something about that clock story, you know. All right, pins, I'm watching on a pullback, daily, weekly, monthly are in alignment. Clow, it's another one. Wow, I just noticed that this is a massive ascending triangle. Look at the horizontal pivots and look at these higher pivot lows on the daily. That's an ascending triangle. We don't care about that word per se. We care about the structure of it, which means higher demand, had a gap breakout on Tuesday. And so I hope it just consolidates for 2 to 5 days. And then I'll be all over that. All right, CCI. All right, I'm deleting you. That was a long watch, but deep retracement. H is Hilton Hotels, daily, weekly, monthly are in alignment. Hey, I got to get my, shoot, it's not spitting out the name here in the title. All right, we'll have to work on that later. BM, that was bullish as can be, daily, weekly, monthly, provided, provided it holds. And you know, the deeper the retracement into the base, the more questionable. All right, PCG, I was, you know, I didn't chase it yesterday just because of the market, but that was a nice 1, 2, 3, and the weekly, monthly are in alignment. H row, that could be possibly a 1, 2, 3. You know, come back to it. And D dog, you know, a couple of these. There's nothing to do now, but I'm just going to watch pullbacks. Myrna, yesterday 15 or 30-minute high, gave a beautiful entry on Myrna. Oracle, the failed gap breakout. Adobe now I was watching, but now it's a deep retracement, so I'm not going to waste my time watching it. Intuit, we're in as a longer term trade. We sold a third yesterday on the gap up. Nothing to do now.